What's up, everyone? I hope you're doing well. Today, we're coming up with a new video type that we haven't done much on the channel here before, a live training session. You get to go with Francois-Boucher, who's a professional scalper, behind the scenes through one of his live sessions. He's going to be trading live, taking trades, going in and out, explaining the process, and showing you exactly what he does every single day for a living. I hope you make the most of it. We had plenty of requests for more live training on YouTube, so I hope you like it. And let's dive right into it.
Alrighty. Good morning, good afternoon, good evening, everyone. It's the 9th of February. It's almost 10 o'clock Eastern. I am recording this session for posterity. Just so that you know. There we go. Let's start by looking at the daily chart since we don't have any news on the schedule. This bold red line that you see here comes all the way back from late September. And that happens to be resistance for us right now. We are butting heads into resistance from way back in late September. That happened to be support in late January. We're breaking through that as we speak, or at least testing it. The next area of resistance should be somewhere near 1960 if we look at this Fibonacci. All right, so what are we dealing with since last week? We have a breakout of that zone that we were trapped within. And so the breakout has been, quite substantial. The daily bar itself is about 116 pips. And we would be looking for an average of about 96. So we've exceeded an average day of work. And therefore, the probability that we chase this higher is reducing. The probability is getting lower with every pip that we put forward, right? So the further we go, the less likely we keep going further. And that's basically what the aim of the game will be for today, I think. We're going to be selling resistance up here. Right, so having exceeded the average daily range, butting heads into resistance. If I zoom into this on a intraday scale, I'm going to reuse some of the markers that I had before. So this now becomes our ceiling. Right, we need to break through this green marker to go beyond. I'm going to bring this here as our floor. Right, so the floor is now this breakout zone right here that we've broken out of. And so if we come back to this, we want to be buying this. I'm just going to switch these lines around. And grab the green one here. Right, so if we come back down, we want to be buying this. Right, so we're bullish above 1840. And as long as we stay below the ceiling, which is the current high, we can probably sell some of that resistance. Okay, so selling red candles, basically between here and there, the 61%, this high right here. How much space is this? That's our 4 boxes. All right, so we can actually afford to sell a higher high. Therefore, we're looking to get down here, right? We want to be buyers, but we want to be buyers when things are cheaper, right? We don't want to be chasing this high. It's already moved too far, right? The chase is over. Okay, so we're going to back out of this, go into a 5-minute, and maybe look to mark some expected areas where we should, find support. Stuff like this. Right? We're just reusing previous supports, previous resistance. Oops, I don't want 2 lines here. To kind of give us an idea where we might expect or anticipate is probably a better word. A bounce, right? So if we start to drop, maybe we bounce off of this, maybe we bounce off of this, maybe we bounce off of this, stuff like that. All right, so we're just using markers to tell our brain ahead of schedule where a bounce may be coming, right? That doesn't mean you have to participate at every one of these levels. So I'm just going to put this up here. Right now we're selling this. And if we get back to here, we want to buy. And if we break below that green line, we want to sell. Maybe I'll change the color of this to something not red. I'll use yellow. Okay, so this comes back from September. We're there now. We want to be bulls above the high or above this. It's probably a better marker. Something like that. Right? We want to be bulls above this. And we're selling between where we are now and that red line. We want to bounce off of that green line. And if we break below that green line, we're now bears again. Okay, so we are bulls, big picture. But I think for the time being, our 2-hour window right now requires us to sell for 2 hours. All right, because of where we are, how much we've done, having exceeded the ADR, so on and so forth. I think our 2-hour window will be made up of something like this. Right? Now, I don't know how deep this can go. We're looking at 1940 because that's where the breakout happened. Somewhere here. All right, so we know we want to be buyers, but it's already moved too far. And so if you buy this support here, the probability of getting back up is getting less and less and less as time progresses. And so if we sell this, which do I have here? 77. So I'm going to sell that resistance with a 36 pip stop. So that's outside of this area here. Those of you that play overnight, you could assault resistance, but the ADR was becoming more and more and more bullish since the breakout, right? And so selling resistance is, you can see the size of the moves, right? Selling resistance was a low probability compared to the higher probability, which came over and over and over and over and over and kept on coming, even up to the end here. Right. So this is why selling against the dominant trend, like I'm doing right now, I'm doing it because the ADR has been well exceeded. Right. I'm not trying to fight the dominant trend. The dominant trend, as far as I'm concerned, for my time zone, for my 2-hour window, the dominance on the day has expired. Right. I'm not chasing higher. So the trend is there. I want to be bullish, right? But I think I have to be bullish from a lower price. So selling resistance now makes sense, right? But selling resistance back here at the beginning of the day when you're making higher highs and higher lows, right? You have to be a little bit more careful with that. Right? This is the beginning of the ADR, whereas this is the end of the ADR, right? So selling against the trend at the end of what is expected to be a full day makes sense. Whereas at the beginning of a unfolding day, you probably want to go with the trend, right? So yeah, just be aware of what just happened, right? You don't have to look back to September, right? You just have to look back. Is this a breakout or is this a bounce? And in the case of the overnight, Asia slash European session, it's been breakouts all night. Okay, so it's situational, and there's nothing wrong with doing both sides. You just have to be aware of what the problems that you might face, right? Uh, if you're trading against the trend, the tide will eventually lift all the boats. And we saw that throughout, right? At this point of the game, having exceeded the ADR by like 20 pips or so, it's unlikely that we keep going, right? We would have to have some kind of a reason. Oops, I missed that red candle. I missed selling the green, sorry.
I just want to take a quick second here because we have a lot more content coming up with Jean-Francois in the next few weeks. If you want to see that in the channel, make sure you subscribe to the channel. Make sure you also click the like button in this video to show us you really like these videos and these live trading sessions. He's going to be coming up with some lessons for scalping, some mindset stuff, some risk management stuff. If you want to see all of that, make sure you subscribe to the channel. Click the bell to be notified of future videos. And leave a comment below too. Let us know what you want to see more on the channel, and we'll be happy to do it so that you can get the best value and reach your goals in trading. So we'll jump right back to the live session.
I've also, this morning, I bought EuroCAD at 1.618180. Basically, I'm expecting a breakout for the EuroCAD to the upside. There's a flag on the weekly scale, and we're just about ready to break that flag. So I might be holding on to that EuroCAD for a while. The target looks around 170. Where's my target? Right here. The target is at 1.70000. Pink. Yeah, pink. There we go. I have a yellow there already. A little bit more, we'll sell it. If we can get back to that previous area here. Right, so even from here, if we push higher still, our 4 boxes from the current price, our 4 boxes takes us to 1950 almost. Right, so we have a range that we can still cover and participate, right? So even if it pushes slightly higher, looking for that resistance, right, we can afford to play 4 boxes. Here's a green candle, click number 2. This is what's missing. After a while, you don't need the boxes to see support and resistance. Yeah, as long as you have a reason to do what you're doing, right? This is the primary thing that I'm trying to teach you guys. Right? There has to be an assumption of support or an assumption of resistance. You're clicking on the mouse because you think a bounce is near here, right? So, but then the near here has to be refined or, massaged. And that's how we end up with 16 clicks, right? But one of the dominant things, the dominant trend is what we're either fighting against or hoping to have help from, right? So when the ADR is brand new, like it's a new day, the probability is leaning towards a trend. Right? So just keep that in mind. But situational, maybe you had, like you said, a 4-hour candle. You had a reason to do what you did, and that's perfect. Right? Just understand the tide will eventually come around, and that's where you will eventually get stuck holding the bag. Right? So just understanding where the risk is, even though the probability may still look fantastic. right? So it's the rock and the hard place. You're trying to define the rock, you're trying to define the hard place, and you're trying to agree with which one is less painful, right? And in some cases, you and I can both make money in both directions, right? We would have been better off or easier to do it one way versus the other. But no, I'm not dishing out. I'm not trying to give you shit. I'm just opening the window and the doors to let you see the potential. And yeah, it's awesome to see you guys do this stuff, man. The problem we all have is that we want more than 3 pips, right? So then if it doesn't work right away, you're now up to 2 clicks, 3 clicks, 4 clicks. You're still looking for that 3 pips. This anxiety starts, it's like boiling water, right? When you get to 16 clicks or the fourth box, the water is boiling and you're out of options, right? And this is why we're learning to judge the risk before we start deploying the 16 clicks, right? The top down analysis. And so if you do a top down every time that you sit down for 2 hours, you'll find yourself sometimes trading counter trend and sometimes trading with the trend, right? That's why I'm saying I'm not giving you shit. Maybe you were doing exactly what you saw to be the right thing. Just understand the dominance of the overwhelming trend is what's going to eventually come and, move everything. So yeah, this is awesome, man. Trying shit outside of normal nomenclature, what the industry is teaching everybody is to lose slowly. Have a 60% win rate so that you lose 40% of your trades and you're okay with that. Because the 60% of your trades, you probably won't hold on long enough to make any kind of money with. Right. So that's where their business model comes from. You won't hold on to your winners and you're going to lose the other 40% of your trades just flat out, right out of the gate. Right. So they're not looking for you to win. Definitely not. So what all we're doing is exploring different, potential average yield. This is not the only trick in our toolbox, right? This 2-hour window is not the only thing that we do. There's swing trading, there's different pairs, there's metals out there, there's a whole universe of things to do. This 2-hour, 3 pips is just one little slice of your entire trading business. And this one little slice teaches us a lot about our behavior and the market in general, right? It's all up to us individually to manage our own individual risks. Right? I'm not living in your house. I'm not living in your shoes. I don't have access to your checkbook, right? I don't know why you're doing this. And so all of that applies on the personal level, and that's where the risk management is. That's where the risk management lives. Right? And that's why it's very, very difficult to what's the word? They say this all the time. The past does not predict the future, right? It's very, very difficult for me to expect you guys to have the same outcome as me, right? You're just not at that level. And so you have to start wherever you're starting from and work your way up. This here, 2 hours per day, teaches you more than you need. Right? Because if you're just swing trading, you don't have enough trades to learn. It's going to take you more than one lifetime. You're just not dispersing enough clicks to learn from. Right? I should have done this on this trade. I should have done that on that trade. I should have done this different on that trade. It just doesn't work like that because it's a universe of instruments. They all behave their own way, and there's no way for you to understand where you went wrong. Right? So if you focus on one instrument, at least in the beginning, while you're learning about support and resistance and supply and demand and price action in general, just limit yourself to one pair, something like this. Right. And then once you understand how you behave under duress, when your 4 boxes are full, that's where the rubber meets the road, right? That will define the next 20 years. Do you want to be panicking and freaking out every day for the next 20 years, 2 hours a day? Or do you want to be relaxed and chilled for 2 hours every day for the next 20 years? It's not what you see in the movies. The problem people have is with the losses, right? Clearly, people don't have problems with winning. Like they enjoy the winning, right? They favor winning. Everybody favors winning. But everybody has to learn how to lose. And that's where the market makes its money. Yeah, the dominant trend and then the intermediate trend, right? Telling the difference between the two is why we do the daily and the 1 hour, right? That's why we do a top down, right? We're checking 2 different time frames. The alignment between the time frames is where you're trying to not get caught with your pants down. Right? If you can see an alignment in the 2 time frames, the probability is there's a trend on their way, and you want to get it on the cheap. So you're buying dips and so on and so forth, right? Or selling resistance, like what we're doing here. Yeah, as long as you have an excuse to click your mouse, right? It's not just sitting here clicking willy-nilly because you feel like it. And then overnight, there was elections in Japan. There were Chinese news. There were, I think this morning, Bassett or Hassett, somebody said something and the market reacted. Right? So this is ongoing. It's not, there's no way for us to predict the next headline. And so the best we can do is review the calendar and avoid what we can, right? Because we're not trying to react to news. We'd rather watch the news come out right here, and then we trade after the news. That's why we put that marker here at 8 o'clock. Right, so we let the news come out if there is one on the calendar scheduled. Maybe it leads us up here, and then by the time we start from the top down, we are starting after the news. And so we are reacting and not anticipating, which is opposite to most swing traders, right? Most swing traders are forced to live through the news event. They're already in the trade and their target is likely somewhere else. And the news is just interfering with things. Right? So there's a multitude of ways to trade with or without news. And depending on what your approach is, you can exploit it or see it as a fear factor. Some folks target the news specifically. I have a page in my playbook to do that, but it's not something I find myself doing very often. Usually if I'm trading down here, 5:30, 6 o'clock. That's usually when I play the news events. The 10 Eastern stuff, the ISMs, the CPIs, the PPIs, I tend to trade reactionary. The news down here, the morning news, the early morning news, uh, tends to give us the volatility to fulfill the ADR. And then when I start near the top or near the bottom of the daily candle. And by definition, I don't have much further to go, right? The day is usually nearly finished. Today, the daily candle has been exceeded. Right? We were looking for an average of 96, and we've put in 100 and something, 120 almost. Right? So we've exceeded the average daily range, and we've done so pushing into what was support on the left is now resistance on the right. That happens to be coming all the way back from September. Right. So either we break through this and continue onward, or we bounce off of this and come back to try and pick up from a lower price. All right. Steady. Those of you that are trading pivots, traditional or Camarilla pivots, we've all in basically 2 days, we've made it all through all three of the weekly Camarilla pivots. Just like an hour or so ago, we bounced off H5 on a weekly. 1926 up here. Traditional pivots were well above R3 for the day. So that's a good place to sell. Daily R3 was 1899. So we're slightly above R3 right now. I'll sell this. We spent the whole week last week going sideways. Down here. It took us until this week to get the break we've been looking for. 7 and 8, closer to the top of the box. Number 7, maybe? Yeah, if they make a higher high. I'm looking at it more like a doji. Oh, it's hard to see because of the red line here. We went and did groceries in the town next door on the weekend, and I'm disgusted with the prices of stuff, man. It was heartbreaking. I'm glad I don't trade the CAD. My mind would be all mixed up. It just doesn't make sense. Boots on the ground don't match what the chart says. Is it? You've gone past the bottom of the hour. Pulling back here. The dollar index looks to have found support temporarily. A little bounce here would not be unexpected. We look at the dollar index. Oops. Button got stuck. Back to support. Perfect. We just find resistance up here. Back to September, October, September. September 16th. Yeah, wouldn't be a bad idea. Stopping if you've made 0.25%, why not? You're walking ahead of the game. Right, so going into tomorrow and Wednesday, as long as we remain above 1840, we have to remain bullish. That that lower green line over here, that breakout. You can play the bearish side, but you have to have the bullish, bigger picture in mind. Wonder if the overnight Asian session, I wonder if this is having an impact on our euro. It may very well be. Euro Swiss is making new lows. There's spillage from the Epstein files everywhere. Release the Trump files and you'll find Epstein. In the meantime, the unemployment and the employment numbers in the US are not looking all that hot, huh? So it's going to be in our best interest to keep an eye on that 61% here, 1960, with the news coming out this week to see if we're going to retest the 120 area or if we're going to be back down to the 116. I think it hinges on the employment numbers going forward. The US side of the Euro USD. I think we're going to be playing the USD side of the equation for the next few weeks. And if I remember correctly, I think this week the Treasury is selling huge. Like I'm talking billions and billions and billions. So yeah, they have 30 years to sell. They have like they have blocks at a whole bunch of different times. Slow day for us. All the activity happened before 10 o'clock Eastern. Yep, well done. Yeah, when I came to my desk this morning, I shut down my swing trades at 1875 because I got in at 1775 and we had already exceeded the 161 extension. We had exceeded the 161 extension, so I took my swing trades off. Did not anticipate getting another 50 pips on top, or I would have kept them open. I was not expecting that much uh, above and beyond, you know. And I think that's why I'm thinking the the Japanese elections overnight may have had something to do with this. Our swing trades closed. I closed my swings right around here. Gonna retest the 1900 maybe. Bottom of the box. We're not really going up and down the ladder much. All right, let's see what we get out of this the next hour. What does it look like on the weekly? Kind of bullish, isn't it? So when you kind of pull back, we're buying the dip sort of deal. What does it look like on the monthly? Brand new month. Running the same trades over here. In this account over here, I have Euro CADs running also. Looking to get in on the CAD Swiss. If I can get in somewhere around 56, that'd be awesome. Right now it's at 56.44. I'm just thinking out loud. Looking at some of the other pairs I have an interest in. Can you guys hear the construction outside my window? Probably not. I hope the Zoom noise cancellation taken care of it. It is so mild outside in Jasper. It's crazy for this time of year. It's unbelievable. A lot of construction happening. So at the end of our 2-hour session, considering where we are, resistance, so on and so forth, considering where we may be able to find buyers, at the end of the 10 hours, at the end of the 2-hour window, whatever remains open, I may just take the targets and move them closer to like 1850 or 1875. Move the targets maybe halfway to support outside of the 2-hour window. If we can get 40, 45 pips, going down after 10 o'clock, that would be awesome. It's not breaking through the pink line. Candle number 3 is back on. ADR for today is at 117. We were expecting 95. So if it pushes further, it's not going to the moon. Not today. Number 4. To the moon. Top of the hour, we just went through the fixing window. That might be what this is right here. I have to close my curtain. The sun's shining on the monitor. I can't see it. There we go. That's much better. Yields are coming off of support, the 10-year yields, that is. So we would expect the dollar index to follow suit. Cycle, if we get a green candle. Preferably at resistance. They're on the corner of the box. See if we get back up here in this area here, we'll recycle. Do we get 6? Maybe we get 7. There you go. Well done. So you recovered in both accounts. That's awesome. Yeah, and it's not the recovery piece is not a chase to the finish, right? It happens over time. The losses we uh we absorb, one here, one there, one here, one there. Once in a while, when you get painted into a corner, anxiety goes up. Now all of a sudden you feel threatened, you feel revengeful, so on and so forth. That's the psychology we're trying to control, right? And then once you have that piece under control, a couple of deep breaths later, you have to realize that you'll make that money back in the next, 20 years. It doesn't have to be the next 20 minutes. And so once you take that into consideration, the anxiety kind of disappears. The problem lies when you're trying to make rent or you're trying to, withdraw from the account and the account is just going down on its own, right? That's where the problem lies. So trade with money you can actually afford to lose. The outside noise, outside of trading. So you got Twitter, you got Truth Social, you've got the news box, the squawk box, the news wires. All of that noise is working against you. And so you'll notice we tend to only follow the news or listen to the news at least for our 2 hours. And, I try to avoid it if I can, avoid trading the news, right? I just, that's where the uncertainty lies. I don't know what's coming out of their mouth or what's on their mind. So aside from the stuff that's already scheduled, the headlines are, you know, the worst thing we can encounter. Trying to be flat every day, saves you 22 hours of anxiety. If you can't be flat, at least agree to the risk that you're undertaking, so you don't regret it when you walk away at the end of 2 hours. Wonder if today will turn red. We all have our clicks in, so we're just waiting to recycle or move up an extra box. Kind of stuck between a rock and a hard place. We made it to 1925. Found sellers. Boom. Well, we are flat. I guess we could keep going. We got time. Some of you may want to stop. That's okay too. I just want a green candle to get in. I don't want to be chasing this. That's a little bit of a bounce here, maybe. We have the break. Go low. Come on. It just doesn't want to make a higher high here. Come on, come on, come on. If we get back here, I'll put another trade in. I'm really curious to see which side of 1900 we finish today. Again, right? We don't want to forget where we broke out of right here. So as long as we remain above this today, tomorrow, we're looking for the start of this. We don't know where. Right, so somewhere along here, hopefully before we get to this. This is probably more like that. And then I'm kind of hoping for something either like this or like that. Yeah, this is the news we're waiting for in the week, later in the week. I'm just going to leave this out of there for now. All right. So on the hourly scale, we have lower high, lower low. We have a 3-bar reversal. Typical 3-bar reversal off of an important level that dates back to September last year. This may actually lead us down here. Be nice. Nice little trend. And we're below 1900. Any kind of a good deal, so a green candle. We need a green candle to sell. Or the edge of the box, retesting the break right there. I think I changed the size. I'll just duplicate it. It just flashes green for a microsecond. There's nothing on the left. Right? We have nothing on the left. I got the best deal on that candle. So I'll save the next 4 for the next box. We either need to go up here or down here. 8 o'clock, top of the day. So we've been selling since the top of the day. See if we get back above 1900 and start selling again. Boy, oh boy. Who or what are we waiting for? Buying the dip. So for those of you that are going to trade overnight, you want to be buying the dip down here, whatever dip we get. It doesn't have to reach 1840, so keep that in mind. It doesn't have to find its way here. It could stop anywhere, turn around. This should find buyers. but there's no guarantee that we come here. And so for those of you trading overnight, keep that in mind. On the flip side, if we get a higher high here, you probably are looking for this. The red one is also 61, I think. Yeah, 61. So if we don't bounce at 61, we're coming back down. And I think this will be because of the news that we have. Right, so on the calendar, we're either going to come through here or bounce off of there. And that's all US news. That's right. That's right. You get what you get and don't get upset. Just about there, huh? 4 boxes from the top. I think this 2-hour business will be finished on schedule today. If you're going to keep trading past 10 o'clock, just understand the bars typically get smaller, right? So our expectations don't get fulfilled as quickly, if at all. And so odds are you're better off waiting until, Asia midway, closer to the European session. So today's session was recorded. I'm gonna do some little bit of editing, cutting out some of the garbage and then take it from there. You trade overnight. You want to be buying 1840 if you see it. All right, folks, I'm gonna let you guys go. It's pointless for us to just sit here and watch 4 trades close. And we'll be back whether tomorrow or Wednesday. I'll see you guys then. All right, enjoy yourselves. Trade small, trade safe. Bye-bye.
All right, so I hope you liked it. This has been a long session. A lot of stuff here for sure. A lot of valuable lesson I'm sure you've got from this. Make sure you comment below with what you've learned from this video and what you want to see more of. Subscribe if it's not done yet. We publish these videos 3 times a week. 1 or 2 videos every Sunday, and then 2 videos in a week with some tips, some experience from traders, and some lessons you can apply to your own trading. And we'll catch you back here in the next video pretty soon. Ciao.